If you have money sitting in a savings account with one of the big banks, earning basically nothing, here are 5 high-interest savings account alternatives in Canada that actually make your money work for you. Hey, I'm Jessica, certified financial counselor and best-selling author of Everything But Money. And after a decade of helping Canadians with their finances, I've seen people miss out on thousands of dollars just because they didn't know better options existed. Today, I'm going to walk you through which accounts are worth your time, how interest actually works, and what to look for beyond just the rate. Subscribe if you're ready to make more on your savings, and let's dive in. Okay, first, just to get this out of the way, here's how interest works on savings accounts. There's an annual interest rate on the account, such as 2%, but that interest is calculated daily using your closing balance. Then these daily calculations are added up into one monthly interest payment, which is then paid into your account. This is why, depending on the deposits and withdrawals you make from your account, the actual amount of interest you'll earn after a full year will vary. But to keep things simple for this video, I'm just going to use simple interest to show you how much you could earn in your savings account and why getting the highest interest rate is so important. So let's do a side-by-side comparison of the big banks versus the online banks, which always offer higher interest, by the way. And FYI, online banks are just as safe as the big banks. I don't know why people still have this misconception that they are unsafe. All the ones I'm showing you are insured by the Canada Deposit Insurance Corporation, CDIC, or in Safe and Financial's case, the Financial Services Regulatory Authority of Ontario, FSRA. So if any of them go bankrupt, your money is protected up to certain limits. Now, to learn more about CDIC and how your money is protected, check out this video after. So let's first look at the big banks. As you can see in this chart, none of the big 5 banks in Canada, RBC, BMO, Scotiabank, CIBC, TD, offer 2% interest or more on their high interest savings accounts. And don't be fooled when you look at their websites and you see them offering a promotional rate of, say, 4.6%. These rates typically only last a few months and then drop back down to their regular crappy rates. Don't fall for it. Now, TD comes close at 1.5%, but they're actually the worst account in my opinion because they only pay out interest when you have a certain minimum balance in your account. For instance, if you have under $5,000 in your account, you earn 0 interest. And to earn that 1.5% interest, you need $500,000 or more in your account. Who has that kind of cash just sitting there in their savings account? And if you do, oh my God, please invest that money. CBIC also does a sliding scale starting at 0.2% under $10,000, and you can only earn their highest rate of interest, 0.8%, if again you have $500,000 in your account. If you've got that kind of cash, do something better with it. In the middle, we've got Scotiabank with a flat 0.4%. Nothing special. Then, tied for the top spot, we've got RBC and BMO offering a flat 0.55%. Now, to give you some perspective, here's how much my friend Erin would earn if she put $10,000 into each of these accounts at the beginning of the year. As you can see, Erin could only earn between $20 and $55 in interest under $10,000 in savings with any of these big banks. But what if she were to switch to an online bank instead? Let's compare. I scoured the internet to find which banks offer the highest interest rates, and the winners were Oaken Financial, the PC Money Account by PC Financial, Wealth One Bank, Save and Financial, and Canadian Tire Bank. These are all online banks, like I mentioned, meaning none of them have physical locations, but again, your deposits are safe with them as they are all insured. Plus, I've exclusively been using online banks myself for close to a decade, and I've never had any issues because, let's be honest, most of the banking that we do, such as paying bills, depositing money, transferring money to different accounts or to people, that all happens online anyway. Now, as you can see from this chart, they all offer interest well over 2%. So let's check back in with my friend Erin to see how much more money she could earn by switching to one of these online banks. As you can see, Erin can earn between $240 and $280 in interest. Comparing the best big bank to the best online bank, Oaken Financial would net her $225 more than RBC. That's an increase of over 400%. Now, you may be thinking, well, what's an extra $225 per year in interest? That doesn't seem like that much money. Well, that's where the magic of compounding comes in. If Erin were to stick with RBC for 10 years and never touch her $10,000, after a decade, she'd have accrued $563.81 cents in interest. But if she went with Oaken Financial, after 10 years, she would have accrued $3,180.48. That's a difference of $2,616.67 compared to RBC. That, to me, is a good chunk of money just by switching savings accounts. Now, just a quick word about tracking the difference. One of the best things you can do when it comes to optimizing your savings is to have a budget and track your savings numbers and net worth over time. This is how I've been able to help hundreds of clients over the years take control over their finances and actually start saving money where before they didn't believe there was ever enough money left over to save. Believe me, there is.
Oh my God!
This reminds me of a story I share about a client in my book, Everything But Money, actually. She was one of my first clients and she was drowning in debt and couldn't figure out a way to put anything into savings. I helped her organize everything in my budget spreadsheet, helped her craft a debt repayment plan, and got her to recognize some unhealthy spending patterns so she could redirect that money into savings. Now, after a few years of consistent hard work, not only did she become debt-free, she was able to save up enough money for a small down payment on her first home, which was a really big dream of hers. So don't discount yourself. This could be you. Now, if you'd like to get your finances together, make sure to grab one of my budget spreadsheets below or by checking out my YouTube store. But out of all these online banks, you may be wondering which one is the best. Well, honestly, they're all pretty much the same. I've opened accounts with many of them over the years. Some have better websites and dashboards than others, but honestly, they're all fairly comparable. But I do have two favorites. First, Oaken Financial. I've been tracking savings account interest rates for years. I even have this blog post I regularly update with rates if you're interested. I'll link it in the description. And Oaken Financial has consistently offered some of the highest interest rates in Canada year after year. They are also the only online bank on this list that offers savings accounts to residents of Quebec. None of the others do, unfortunately. So they get the top spot for me for those reasons. Second, the PC Money account. Not only does it offer the second highest rate of interest right now, but if you collect PC points and often shop at Shoppers Drug Mart or Loblaws, when you open an account, they usually offer a special offer like 200,000 PC points, plus you can earn PC points when you spend money using the account. So you get interest for savings and points for spending, which is really nice. But just know, when you keep money in the spending part of the account, you don't earn any interest. So only keep what you intend to spend in there. The rest, make sure it's in the savings part so you're earning that interest. But still, if you're wondering which one should you choose, honestly, you can't go wrong with any of them, so just choose one. Now, a question I get asked a lot when talking about savings accounts, which is a thing I do. What about Wealthsimple? What about Neo Financial? There's nothing wrong with them, but they just didn't come close. Wealthsimple only offers 2.25% interest, which is fine, but you could do better. Neo Financial does a sliding scale, which I just do not like. It starts at 2.25% under $5,000, then 2.5% between $5,000 and $20,000, and then 2.9% over $20,000. Now, doing some simple math, you'd still be better off going with the 5 online banks I just shared. Now, if you already use Wealthsimple or Neo Financial, then maybe the convenience of having your accounts and products all under one roof makes it worth it for you. But let me tell you why you should actually keep your savings accounts at a different bank than your day-to-day bank. If you see it, you're gonna wanna touch it. Behavioral finance suggests that the best way to grow your savings over time is by making contributions and letting it grow on its own. But if you log into your bank every day or even every week, you're gonna see that money in your savings account and have the urge to spend it. Instead, honestly, you need to kind of trick yourself and forget that money even exists, which is a lot easier to do if you have your savings at a completely different bank, out of sight, out of mind. I'm telling you, this strategy, it sounds simple, but it really works. I've had countless clients who used to struggle with saving before setting this up. Once they did, they finally started to see their savings grow. So give it a try. A few percentage points may not seem that important, but as you can see, it could mean the difference between earning hundreds or thousands of dollars over time. And I think we'd all rather earn thousands, right?
Absolutely.
So take some time after this video to see what interest rate you're earning on your savings accounts, and consider making some changes if you're not earning at least 2.4%. Also, don't forget to download my budget spreadsheets to help you get your bank accounts and savings goals organized. Again, you can find them below or in my YouTube store. And if you're living in Canada and feel like you're financially behind, watch this video next. I know it'll help. Well, with that, thanks so much for watching. You've got this, and talk soon.